This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as he is every week, he will fire you from his prop firm if you spell his name with one B. It's Robb Reinhold.
Ooh, that is true. Actually, I'll probably forgive that one, but don't call me Robbie. I have never liked that ever since I was a kid.
Haven't done that yet, but I'll put that in the old toolbox here. So this is going to be a Robb-focused episode times 10 because what we do here on the show is really try to get you ready to trade professionally in some capacity, whether that's trading for yourself, for a firm, anywhere. But the concepts we talk about are generally more abstract. I guess that's fair to say. Today, we are getting right down to it. Robb, if you didn't know, is the CEO, the head of trading at Maverick Currencies, the prop firm that sponsors this very show. Maverick Currencies is a full-scale, full-service prop firm, probably the closest thing you're ever going to find to trading at Goldman Sachs as a prop firm. In a sea of fly-by-night companies, Maverick is the gold standard. You can trade stocks, options, Forex, crypto, all of it. And Robb, anything else you want to say to that end before we actually get started? We haven't talked about the firm in a while. I feel like it's time to do that for a little bit.
Yeah, I don't really know what to say. I mean, you covered it right there. We've been in business for 28 years. The first about 7 or 8 years, we were a broker-dealer. And then after that, we transitioned to a prop firm right around the mid-2000s. So when I first started out as a trader, I actually walked into Maverick Trading's doors as a trader. And I sat down at one of the desks that I rented, and they had a T1 internet line, and I traded right there in the office. And then I opened up my own branch, and when they sold off the broker-dealers operations, I went ahead and kept going and turned it into a prop firm. So I really wanted to put together this episode because I feel like I've been in a very unique situation where I came in the door as a trader, just like everyone, had to figure it out. But now I'm looking over the shoulder of hundreds of traders. And it has given me a completely different perspective of being a trader. And it also has made it to where I'm a better trader now because of it. This episode, I wanted to kind of share some of that with you. I know it's going to be very difficult for anyone here to get that same sort of experience, but I want to try to push my experience off onto you so you can actually take in what I've seen and actually make some changes to your own trading.
But more specifically, we're going to hone in on the risk management side for this episode. This may end up being a series of episodes, but we're going to focus on risk today. So if I'm understanding this outline correctly, Robb, I guess we're going to start by kind of defining terms of exactly what this episode is going to be about. I mean, I guess in a more general sense, it's going to be about risk management. But how are you approaching this? What lens are you looking through exactly?
The first thing I want to do is explain what a risk manager does at Maverick. So let's say we would hire you or hire someone else. Basically explain, okay, this is your job, and this is what you do. And then I want to transition into, okay, maybe you don't have someone here for you to do that for you. How can you do some of these things yourself that a risk manager can do? The risk manager's job is to get the optimal performance out of each trader and also take the least amount of risk. So that is really, in a nutshell, what a risk manager does. They don't just slap someone on the hand when they're bad. A good risk manager will go in and say, hey, why don't you do it a little bit differently? Why don't you do it a little bit better? Or, hey, I've noticed that you're making some irrational trades lately. Why don't you take a little break here for a little bit and then you can come back? Or, hey, you're struggling a little bit. Let me see what we can do to get you on the right track. Or, hey, you're doing great, but let's start to think about how to manage these gains. You're on a hot streak. I've seen when people get on hot streaks, it's typically they're batting above their batting average, and it is going to revert to the mean. Let's make sure that we don't screw it up. So really, a risk manager is there to be your coach, and to make sure that you are getting your optimal performance.
So if I take the job Am I allowed to browbeat and insult new traders and break them down so we can build them back up again? Because that's what I see in movies.
No, that is not our vibe. And you know that. You know that is not Maverick's vibe at all. Look, we're all just a bunch of people trying to make a living in this business. And we just try to keep it positive and productive as we possibly can. Sometimes there's some problems we need to deal with, but we'll deal with those when they come.
All right, well, I respectfully decline your offer then. Let's go ahead and move on to what exactly are these risk managers even looking for? Because I think it helps if a new trader's coming in. I guess this is where I kind of had a misstep here. I mean, I was drowning in my own paranoia that first year, just wondering what these people were looking for in me, and if I made this move, what would they say? 90% of the time, I'm sure they didn't even care, and they were just looking more at the big picture. So kind of spell it out for new traders coming into really any well-run prop firm. What is the risk manager looking for in their trading? Break it down piece by piece for us.
Let's go ahead and start with kind of the daily grind. The daily grind is you are looking for risky positions. You are looking for traders that are exhibiting behavior that is not great. So that's really the first layer here is, okay, where's the risk of the firm? Where are my, because look, every trader has a different risk tolerance. And we at Maverick, we have very risk adverse traders. We have very risky traders. So really, we don't really know how someone's going to trade until we watch them. And then all of a sudden it's like, okay, this person trades in a style that has some big swings. We need to be more active with that person. This person over here is very risk adverse. We don't really need to check in on them until the month is over and we go through statements. So that's really the very first job, is to be there, ground zero, looking and watching while the markets are open. And in Forex, it's tough because markets are always open. But again, identifying the traders are going to need a little bit more assistance. That is, again, the day-to-day grind of a risk manager. We're also looking at the risk for the firm as a whole. So yes, we are looking at individual traders, but then we have to take a step back and basically group all the trades together that the firm is in. And we have software that does this to where we see, oh, we are really long dollar here. And in fact, we're way too long dollar as a firm. We don't want to go in and hit our traders over the head and say, hey, you need to take down your dollar exposure. We'll actually take down that exposure by, again, selling a little bit of dollar to bring it down. This is the daily grind of a risk manager, looking at individual performance, looking at individual risk, and then looking at firm risk and making sure that we're always going to live to survive another day. So that's kind of just a day-to-day grind. And then we have at the end of the month. At the end of the month, when we have performance, this is where we really dive in. We have trader meetings. We discuss the performance of traders on that monthly basis, and we identify who can we help, who can we assist.
So for all aspiring traders out there, aspiring prop firm traders who have not joined a firm yet, if they aspire to join Maverick, and if somebody is more risk tolerant and that is just their style of trading, that does not necessarily work against them, is what you're saying, right?
No, it's our job to manage them. It's not our job to limit them and to hold them down. It's our job to manage them and help them and make it to where they survive drawdowns, to where they can thrive when they're hot. That's our job as risk managers to do that.
Okay, so that's more of like a holistic overview. So drill down a little further. In particular, what specific things might you be looking for after you've already gotten that first data set from their first 1 or 2 months in live trading?
Well, this is where performance reports and metrics come in really handy, because now we can say, okay, we've got a month under the belt. Let's take a look at their numbers. And this is where we can take a look and say, okay, this trader, they made some mistakes here. They don't understand the software well enough. Let's get them with a coach so they can understand the software better. Basically, we have our trader meeting to say, okay, what can we do with each trader? Now, look, some traders, they just do their thing. They're never in any risk trouble. They make their profit. They take their distributions, and we just give them a high five and say, good job. Let us know if you need anything. But then there's some traders where we actually go in and say, hey, we think we can help here. What can we do to help you out?
Okay, so we got a little more granular that time. Then take it down even further. Are there any like specific metrics you're looking at? Because this is the really interesting part to me. You know, what's going on behind the curtain? What are the metrics that these guys are actually looking at? You know, we covered what you're looking for in general, but what are some actual numbers that can kind of get you to that conclusion, if you know what I'm saying?
Yes. But before I get to that, let me ask you this question. And when I mean you, Patrick, but also you out there listening. Imagine you hired a trader to trade all your money, and that trader is going to be trading for you. What do you want from that trader? So imagine, Patrick, that you decided, hey, you know what? I'm too busy with everything else. I'm going to hire one of my subscribers to manage all my trades and my money. What would you look for in a risk manager or in a trader? Sorry, not a risk manager. What would you look for in a trader?
So I don't know if this is a totally correlated question because in a prop firm, they're only trading a small amount of your money. If somebody's trading 100% of my money, I would want nerves of steel. I would want them to be almost completely detached from 99% of the things going on in the world and just be able to look at things in a very mathematical and analytical way. Like there's no room for creativity here. I want a very regimented approach because until I get an actual data set from this guy in the arena, guy or girl, I'd probably hire a girl because they're better at this part. But until I get that actual data set of how they trade in this particular arena, I don't really know where else I can go. So I'm going to err on the side of caution here and say fairly low position sizes to start. You know, let me see how you do under pressure, but without risking a whole lot of my money at the start. Maybe that's not the answer you're looking for, but that's, you know, if it's 100% of my entire net worth was in this person's hands, that's how I would start the first 1 or 2 months.
Let me ask you this question. You've got two traders. You've got one that's going to lose you $10,000 one month and then make you $12,000 in another month for a net of $2,000 of gains. And then you have another one that's just going to make you $1,000 a month and never really have much variation. Who are you going to choose?
At first, I'm choosing person B because I have to see what these swings look like from person A. If I had a more zoomed out view of what these people could actually do, again, in this particular arena, what you can do when there's nobody over you and when you're not trading anybody else's money, and what you're doing when you are trading somebody else's money are two completely different things. So until I had that data, I'm going the safer route against my better judgment. But in normal circumstances, I would actually take person A because I take a long-term view. I know losses are part of the game, and I want the most bang for my buck without taking unnecessary risk. So I know that's not a direct answer to your question, but early on, person B, down the line, if those numbers prove to be consistent, person A.
Well, in my example, they both gave you the same return. So I'll just go ahead and say for me, I'm looking for the lowest bit of drawdown I can possibly get.
Now, wait.
That to me is way more important.
Sorry, Rob, objection. You said person A was minus 10,000 plus 12,000, and person B was plus 1,000.
Oh, sorry. I meant plus 1,000 per month.
Oh, okay. Well, if that's the case, then yeah, just give me the person who has zero drawdown, and I'll ride that mythical unicorn to the stars.
Okay. Wow, we just wasted a lot of time with that misunderstanding. My apologies. But look, and you were even right. Let's say that it was a lower return with Trader B. At first, you would choose them because you didn't want that kind of roller coaster ride. You wanted to, again, get comfortable with the person, see what they're like, see how they handle themselves, and then maybe you choose person A after being able to watch them for a long period of time. I totally agree with you on that one. So I want you to, at home, I want you to think about this question. If you hired somebody to manage your trading, what would you want them to do and how would you want them to trade? That is how you should be trading. Here's the irony. Many of you aren't. Many of you, if you were looking over your own shoulder, you would have a meltdown. You would have a heart attack because of too much risk. Or you might actually be on the opposite side. You might be so boring, you might be so safe that it's almost impossible for you to make money. I remember years ago, we had a trader in the office, and I've never seen a trader so disciplined. I've literally never seen anyone this good. The problem was he never made any real money out of this. He was always perfect. He was always patient. He was waiting. Everything was perfect, but he was so risk adverse, he would make pennies and never really made real money. You need to find someone in between. And that's really where you want to be. You want to be risk averse, never put yourself in a situation where you take a big drawdown, but you've got to have that killing instinct. You've got to have that instinct to go after it. So for me, and again, in a Maverick, what we're really looking for is that type of trader that is, again, can keep drawdowns low, but put the pedal to the metal when it's time.
Okay, so you described kind of a mishmash of different personality styles all kind of rolled into one. So that's a little tough to track for your average person. So let's do this instead. What are some of the, let's say, individual traits or individual behaviors that you would look for somebody who embodies, all of these more general traits that you're looking for?
Well, let's start off with those two extremes. I talked about how you need to be able to take enough risk, but you can't take too much risk. One of my favorite sayings in poker is another one of my favorite sayings in trading. In poker, you can put all of your chips in at once and bet them all at once. It works every single time, except for the last time. If you trade like an all-in poker player, I've seen hot streaks. I've seen really amazing hot streaks, but it always ends at zero because that's the nature of the way you trade. On the other side, you've got the person that's just too risk adverse that never ever makes any sort of real money or any real bets. So again, as a risk manager, you're identifying both of these people as problems and say, hey, how do we fix these problems? The people in the middle that are consistent, that have larger gains than losses, that have positive profit factors, that you don't worry about risk management at all with them, they're fine. Yes, there's a little bit of maintenance to do, but as a risk manager, you're really looking for those extremes. And how do you figure out those extremes? One of the questions I always ask my trader whenever there's a risk management call, I always put them in my situation. If this was your money on the line, would you be able to sleep at night? Sometimes they say, of course, I'd sleep like a baby. I'll push a little bit against that. But a lot of times they say, yeah, if I was in your situation, I would be calling me too. I get it. And then all of a sudden, you have a different perspective. The perspective I gained as a risk manager, and this is really what I want everyone to be able to do after this episode, is I am 100% objective because I don't have, I have skin in the game, I have my capital in the game, but I didn't pick their trade. I don't care about their trade. I don't care about their entry point. I could care less what the stochastics are saying or what a Fibonacci's. I don't care about any of that. And whenever I call a trader and they start telling me about their position, I'm like, hey, look, save it. I don't care. I don't care why you got into this. I don't care. There's either too much risk or not enough risk on it. Can you sleep at night? If you find yourself not being able to sleep at night, that is an issue. So let's wrap this up to where, okay, you understand that you are your own risk manager in trading on your own. You need to be in charge of you and your trading. You need to be your own risk manager. So how can you do that? First off, ask yourself, if this was someone else trading my money this way, would I approve? That's the first question to ask in every single situation. And just be objective about it and step back. Now look, I've had many times, especially in my younger career, where I made a trade and I knew I shouldn't do it. I knew I shouldn't do it. It was like so clear. My biggest loss I've taken, I can't remember if I told this story, but it was after the biggest gain I'd ever had in 2008. I shorted Aussie yen, made a ton of money, and I was on a high. My next trade was 100 lots. 100 lots. As soon as I clicked the button, my P&L was like $3,200 lost just from the spreads. And I remember thinking, uh-oh. I didn't get out. I didn't just say, hey, don't be an idiot. You're being an idiot. I needed me to be my risk manager and kick my ass and say, that's a dumb thing to do. So ask yourself, if someone else was trading this way, would I approve? Patrick, do you have a story where you got in a trade, knew it was wrong, but just couldn't get yourself out of it?
Not really, because, well, I mean, there's plenty of trades I should have gotten myself out of, but I let it run too far. Because as an indicator trader, especially if you're doing overbought, oversold, which I did in my early days, you're always waiting for that indicator to make that turn back the direction you want it to go. Now, the punchline there is it can take a very, very long time for it to do that. So do you want to sit there and wait and find out? Or do you just want to cut your losses? Well, I would always sit and wait and find out. But I don't think I ever entered a trade that I felt bad about. I was always probably the opposite. I was probably way too optimistic about every trade I entered because I had back tested, not formally, but in my mind, some of these new indicators, and they seemed to be amazing. So I couldn't wait to actually put it into practice. So that's kind of where I was. So the second half, yes. The first half, really for me, never. I would never. I don't like. That's why I don't gamble at casinos. I don't like going and putting my money down when I'm expected to lose. I always feel like I'm expected to win. And if I do, I do. I don't, I don't.
All right, so that is the entry, but what about a position size? Was there ever a time where you knew the position was too big?
The only time where that happened to me is where I was already down and I was going, quote, all in, which you should never, ever do in anything unless you're in a poker tournament or something like that. But that was like, all right, this has to work. I got $200 left to my name in this account, and I'm just going to let it ride. Now, that in the scope of a $1,500 trading account, that's way too big for one position, of course. But, I mean, look, man, I'm already down $1,500 down to $2. I'm not going to get back to 15 with regimented trading. I don't even know how to do that. So this is the younger me talking. So what I'm going to do is I'm going to go all in, and we're going to try to turn this 200 into at least 600 or 800, so I can finally get back on track and maybe attempt to get back to even. So that was the logic train I followed when it came to those quote all in trades. Stupid, of course. Like you said, they work until they don't, and then all your money's gone. But looking back, I think that's the only time I would fall into that category.
But at the time, did you know it was a dumb thing to do?
Totally, but I didn't care. What's the difference between 200 and 0 to me at this point after I've already lost that much? Not a whole lot. So yeah, I'm willfully doing something dumb and hoping it works.
Look, I get that. And I understand in that situation, that's not really a huge risk. Like if that's all you got left, YOLO, go for it. But there's been many times, at least in my life, where I just knew I was in the wrong. I knew that I had done something against my plan. And that's when your objective risk manager has got to take over. It's got to take over because you made that decision because of psychology, because of what's happening in your brain and all your brain chemicals and your chemistry right here, right now. You have to understand that oh, I'm engaging in self-destructive behavior. I need to stop this. So you need to be your own risk manager. When you recognize that self-destructive behavior, you've got to put yourself in a trading halt. And we do that at Maverick. If I see people that are doing stuff that's, totally outside of the trading plan, sometimes I don't even have a chance to call them and get in contact with them. I just slap a restriction on their account. It says, hey, and when they try to make a new trade, it says, call Robb. Call Robb to get the block lifted. That's what you need to do for yourself. You need to be able to objectively say, I'm engaging in destructive behavior. I need to put myself in a trading halt. It's very, very difficult to do. And that's one of the things we talk about at Maverick, which is beneficial about having a risk manager. We call it forced discipline. If you're having a hard time with discipline, get yourself a risk manager. They're going to be forcing discipline upon you. But again, I know not everyone can do that. So again, we got to be objective and say, okay, if I'm deviating from my system, I have to understand my brain chemistry is all over the place. I need to stop. And so what I do is I put these halts on people. And I just say stuff like, hey, you know what? Take the rest of the week off. Just take the rest of the week off. Or hey, you know what? Let's circle back at the end of the month. What I like to do is I like to wait for long enough to where the market dynamic has changed. Because the reason the trader is feeling that, and let's take you, Patrick, where again, something was overbought or oversold, and you were trying to reversal that, you are like just so eaten up by this inside and say, it's got to turn sometime. It's got to turn sometime. I'd love to break that and then have it to where the market dynamics change. Then when they come back, they no longer have that bias. That's one of my favorite things to do with traders. It's just like, I can see like if they're looking for a reversal, I just say, hey, you know what? Now look, every so often the reversal happens, right when I cut them off, and that does happen. But a lot of times the reversal doesn't happen. And 2 weeks later, they come back and they're saying, I'm glad I was cut off. I'm glad. And now they are coming back with a new open mind instead of whatever they had stuck in their head that was causing them to have that behavior. So again, trading halts, we've had an episode or two on this. I've talked about this. Trading halts are really beneficial for you.
Yeah, I completely agree here. And this does go against a lot of, well, if any of you out there are fans of the podcast, you know how I usually approach things like this. When the going gets tough, the tough get going. If you're going through hell, just keep going. Suck it up, buttercup. Figure it out. There's going to be times where you're down in your trading. You can't just stop and quit every time this happens. You got to trade your way out of it. Situations like Robb just described, if you're willfully engaging in destructive behavior or destructive trading behavior, yes, they will shut you down, and be happy when they do. You're probably not going to like it at first, but like in the example Robb just gave, as soon as your head clears up a bit, you absolutely will. But like Robb said too, you should already be doing this yourself. A good prop firm, unlike most prop firms out there, will do this for you, but you cannot rely on them to do this for you. So you have to be able to do this yourself. Am I kind of making sense here?
Yeah, no, every single person, because look, by the time the risk manager gets in touch with you, you've already messed up. You're already past that point, and you knew. Everyone always knows that the call is coming or the email is coming. People are never surprised when one of us reaches out in the risk management department. They know it's coming because they know where they are. They fully understand it. We all know when we're struggling and doing bad, and this is where, again, you've got to check yourself. Am I engaging in bad behaviors? Is this slump my fault? You have to take a step back and be objective. And if it is your fault, trading halt. Trading halt 100% of the time. Break the stimulus of the market. Take 2 weeks off, 3 weeks off. Let everything change to where all of your biases are now gone. When you come back, you're going to be much better. We also all know when we're doing well. And this is where the monthly check-ins are actually really beneficial. So at the end of every month, we do all the accounting and we look through all the trader performances. And what we're really looking at is two metrics. Two metrics is the number one. Overall return, and then the drawdown or the risk it took to get that return, or what some people call like a Sharpe ratio. Again, this is what we look at. Okay, you made a return, great job, but what was the drawdown on the risk you took to get that return? We have a monthly trader meeting, and we go through all the traders' performance, and then we decide, okay, these are the traders that we need to reach out to. Again, either just to pat them on the back and say, good job, or say, hey, you know what? We noticed that you had some issues. Let's fix those issues. I think it's very important as a trader to have a monthly meeting about your trades. And I know that sounds weird, but I'm going to give you a little bit of a tax trick that you can actually use on this. And then you can also, you should do a yearly meeting. Now, Maverick, we always tell people, look, if you're in the business of trading, you may as well incorporate. All of those meetings, again, companies have meetings. And those meetings, the expenses of those meetings are paid for by the corporation, and they are corporate expenses. So again, a monthly meeting, go out to a nice dinner with yourself and go over your trades, or have takeout, have it brought in, and use your corporation to pay for that expense. But again, you've got to have these meetings because I know it's going to benefit you for taxes, but have the meeting. It's going to be a bigger benefit. Look over your statements, look over your performance, look over your journal, look in that notes tab. How did you do psychologically? Have that meeting. Like I said, have takeout be brought in, write that off as an expense. And then once a year, your corporation has to have an annual meeting. The expenses of that annual meeting can be paid for by the corporation. You could go have your annual meeting in New York. You could have it in Rome. You could have it a lot of places. Again, you got to have the annual meeting, and maybe you won't be able to write off all of it, but you can write that stuff off. But you've got to have these meetings, because I remember my first couple of years, I just traded. That's all I did. Every day I traded, and I never stopped to look back because I was always just living in the future for tomorrow and the next day and the next day and the next week and next month. Looking back is more important than looking forward. Patrick, I know you're big on journaling, and this is just where journaling comes in so important. Trader, especially in the first couple of years, should really only look backwards. Look backwards at your results and be focused on what can you do to make those results better. Again, what could you have done last month to make it better, and then make those changes in the month ahead to see how it goes. Do you have anything to add here about journaling and looking back?
No, but I think what you just said there is something we've never said on this podcast before, that every month is a really good period of time to go back and look. Especially that comment section, which we always talk about here, is the most important column on that entire journal. People think it's actually the least important. No, it is the most. But looking at it every single day, assuming there's something there, I don't think that's very helpful. I think that's a good way to raise your anxiety level. I think at the end of the month, give that journal a good look and say, okay, I made mistakes here, here, and here. Now that those trades are kind of done and I'm over it and we've moved on, I think it's so much easier to learn from those trades doing it this way, looking back after the emotions has subsided. Because this way you can actually get a real picture of what you're doing, and the emotions you had inside of that trade are no longer there. You know, I always say you want to be able to look at things with as clear of a head as possible. I think every month is a really, really good way to do that. So that's the one thing I would probably add there.
Patrick, right before us recording this podcast, I met with one of our traders going over his results. And one of the things is I keep exiting my winners too early. How can I change that? What can I do? And again, he's asking me and I'm giving him some ideas, but you don't need me there. You don't need Patrick there. You can look at your journal and say, hey, I got out before my exit called for me to get out. Why did I do that? have that meeting, have that really deep thought about, okay, why do I do this? My guess is you do this because you're screen watching. If you're not screen watching, it's almost impossible to do this. So then it's like, okay, I need to make some rules that I can't screen watch during, these periods of time, or I can't do this. Have that meeting. Have that meeting like we have with our traders. Have that with yourself. Identify the problems and then really work on fixing them the next month. The way trading works and the way the evolution of trader works is you go from making a mistake a day to a mistake a week to a mistake a month. And then you make a mistake every 3 months. And then you make 1 or 2 mistakes a year. And then you make 1 or 2 mistakes a decade. You're still going to make some mistakes, but you can see it's getting infinitesimally smaller. That no one just flips the switch and becomes perfect. It is a process. Meet with yourself and go through that and really work on it. Then the last thing I wanted to add is, at Maverick, we always have continuing education. We just rolled out a big push about AI as, hey, how can you use AI in your trading? Do the same thing with yourself. Always be learning, always be growing, always finding new things, new edges, new products, new trading styles, always be growing.
So I did a bad job of transitioning us here, and I never really said, okay, we are officially at the solutions part of this episode. So let me go ahead and kind of recap the solutions to the overall question. And I guess the question is, too, we didn't even really illustrate that super well. We just kind of went by the seat of our pants on this episode, if you couldn't tell. But this was really, okay, how can I be, at least as far as risk goes, just in the parameters of risk, how can I be an attractive option for a prop firm who is looking at hiring me? Now, passing a test is one thing, but this is a relationship that's going to go a very long time if you're good at it. So how do you become one of those people that says, hey, I am not only in this, but I am trainable, I am coachable, I am adjustable, and I want to be just the best gosh darn prop trader in the entire firm. I want to be exactly what you want me to be. This is how you do that, at least how you do that here. And I would imagine if you could figure out how to be the ideal client for Maverick, you're probably going to do pretty well in most places. But again, it goes beyond just passing a test. So the solutions there are, asking yourself, if this was somebody trading my money, would I approve? Having your monthly meetings, maybe even adding tax benefits onto that. We don't talk about taxes on this show. I don't talk about it on my channel because it's a very sensitive, ever-changing topic that is different for everybody. But I will say, if you're interested in trading as a business and incorporating, there are in-house videos and webinars that they do at Maverick for that.
Patrick, we actually have one up on our YouTube channel. People could check out.
Oh, nice. Okay, that's wasn't aware you did that. So good. Let's.
I'll give you the link.
Yeah, perfect. Let's do that. Next solution: putting trading halts in yourself if you need to, because some prop firms will, some prop firms won't. But you can't assume that any prop firm is going to do it for you at all. And then the last one that Robb just said, checking in for training and continuing education. There's certain rules you just don't break in this industry, but there are certain things that continuously evolve and evolve for the better, and you should be embracing those things. Now, another solution I want to add, and Robb, I think you can speak to this, is if you follow the no-nonsense Forex way of trading, a lot of this stuff is already built in. A lot of the problems we just talk about, a lot of the problems we just spoke about in this episode really are not going to apply to you for the most part, because the system kind of takes care of all of this for you. I mean, I know there's a lot of no-nonsense Forex traders already there. What advantages have you been able to see, like personally with your own two eyes, that they just kind of have from the start, right as they join? Have you been able to see anything like unique to any of the other traders you've been seeing?
Yes, and thank you. First of all, most of the traders that come to us from your channel are trading on the daily chart, which right there cuts down on so many psychological mistakes. I mean, that right there gets rid of like 90% of the issues. They run a very tight system. They follow their rules. And yeah, then they don't really get these risk management calls whatsoever. So yeah, very happy about it.
Yeah, and the other thing too that I wanted to add as well is you've heard us mention all these things you can do to become a more attractive trader for a prop firm, but I wouldn't obsess over these things. These are general guidelines and just things you can do in general just to be a better trader overall. But I do know at a place like Maverick, they will train you and they will smooth those rough edges away over time. And I know that's one of the things they look for too. You have to be a bit adjustable. Even if you think you're the shit, you probably are, but this is a completely different arena, and it's almost like you're starting the game over again completely. So you want good coaches there who can train you and make you even better. And I know this whole episode has sounded like one big commercial, but I'm just saying I don't know if other prop firms do this because I haven't been a part of them. But I know Maverick can and will. So don't obsess too much over this. But again, pay close attention to it because everything we've said in this episode, to me, is just kind of a good common sense guideline if you want to become better at really anything, much less trading.
Some of our top performing traders, not all of them, but some of them, will reach out to me periodically and be like, Rob, I want to have a meeting. I want to go over my performance metrics. And I'm always like, dude, you're killing it. You know what's going on. And it's not a talk to brag, but they genuinely want to get my feedback and to see if I have anything that they could possibly do to improve. That's a killer attitude. And that is just the perfect attitude. Hey, I'm killing it, but I'm always looking for a way to improve. Can we meet, every 6 months and go over my performance and you can take a look at things? Of course. That's just a great attitude. And if you have that attitude as a trader, you're going to go really far.
So top to bottom, I think we gave you a pretty good overview of what a good prop firm is going to be looking for in terms of somebody who manages risk, which at the end of the day, that is what you are. You can really tell others who don't understand what trading is I'm a risk manager. And you might bore them to death, but that is what you are. That is what we do it every day in every decision we make, but we especially do it in trading and investing and things like that. So hopefully we gave you a good top to bottom episode today. These episodes do go to YouTube, so if you have any further questions, really about anything we've talked about the prop firm industry or risk in general, go to YouTube, sound off down below. One of us will do our best to answer you. And thank you for joining us for yet another episode of the Trading Psychology Podcast. Rob and I will both see you in the next episode.
Goodbye, everybody.